President Bola Tinubu has signed Nigeria's biggest tax reform in decades into law in June. This new reform bill introduces four key laws designed to simplify the system, support small businesses, and reduce the cost of living. And if implemented well, it will work in favor of everyday Nigerians. Now, first, the Nigerian Tax Act consolidates over 50 small overlapping taxes into one simplified tax structure. This means less stress for individuals and especially small and medium-sized businesses who often struggle with confusing and duplicated levies. Secondly, the Tax Administration Act creates a uniform standard for tax collection across the federal, state, and local government. Also, Federal Inland Revenue Service (FIRS) has been replaced by a new body, the Nigeria Revenue Service. This agency is designed to be more independent and transparent. And finally, the Revenue Board Act brings all tiers of government to the same table. So how does all this affect the average Nigerian? Now, for starters, the value-added tax rate remains at 7.5%, not increased to the earlier proposed 12.5%. More importantly, essentials like food, education, healthcare, public transport, rent, power, and export are still VAT-free. That means the cost of living isn't going up on things that matter the most. Now, if you earn up to 1 million naira a year, you are now qualified for a 200,000 naira rent relief deduction. That brings your taxable income down to 800,000 naira, which is below the tax income threshold. In short, you won't pay income tax at all. Now, if your business makes less than 50 million naira a year, you are exempted from company income tax. For larger companies, the corporate tax rate is being reduced gradually from 30% to 25%. Now, companies can also claim tax credits on VAT paid for assets and business expenses. There's also a new development levy of 4%, which replaces multiple smaller taxes. Now, small businesses are exempted, while larger ones like banks and multinationals will carry the cost. Finally, VAT revenue will now be shared in a more balanced way, 30% based on consumption, 50% equally among all states, and 20% based on population. This is expected to reduce tax evasion and help states rely less on federal handouts. Overall, this reform is being described as Nigeria's first truly pro-people tax system. It cuts tax for low-income earners, simplifies the rule for small businesses, and protects the cost of essentials. At the same time, it strengthens the tax collection process to fund public service more effectively. Now, whether these reforms deliver its promise will depend on how well it's implemented. But for now, it's a rare moment when tax news actually brings some relief. So, are you relieved about this new tax reform? Let me know in the comment section. Don't forget to follow us on all our social media platforms at Fact News Africa and Fact News Hausa.